iQiyi stock is on fire! Woo! Hello everybody and welcome to the video. My name is Brandon and today we're going to be talking about iQiyi stock, the stock that is commonly referred to as the Netflix of China, whether that's the right analogy or not. Now I apologize, I'm not actually going to be doing an in-depth analysis in this video. If that's something that you are looking for, I definitely recommend go check out Marvin's video on the Financial Information YouTube channel. He put out a really great video. I think it's about 10 or 11 minutes long. Kind of a nice overview if you're someone that's looking to learn more about this stock. It's definitely worth the watch, so I'll link it in the description for you guys below. But today, with the stock up over 100% over the past month or so, I'm going to take this as an opportunity to kind of show you guys, my subscribers, how I'm personally handling this situation and kind of the thought process that's going on in my head regarding this stock. So if you guys have been following along with my channel, I purchased this stock in late April, right around that $18 range. And it seems like every day I check, the stock is up double digits, no joke. I mean, the stock has absolutely been on fire. It kind of reminds me of Steph Curry in Game 2 of the NBA Finals.
Curry finds some room, gets off the three, got it! Not sat yet, Curry hits a three!
He's a terrific guard rebounder.
Curry again, puts it in! Steph Curry drills another three! Too low, but Curry recovers, shot clock winding down. Curry's gonna have to put it up, launches it up, shot clock, oh, he knocks it down! Steph Curry with the shot clock.
So I've definitely made some good returns on this stock so far. And as we stand right now, I think that there's really two options that I have. The first option is I can go ahead and I can let the stock run. And although we've seen a pretty sharp increase in the share price over the short term, which is something that I normally don't like to see, I do think that the company is in a good position going forward. I do like the industry that it's in. I think that the Asian market, the Chinese market in particular, represents a very attractive opportunity going forward. So I do absolutely want to continue holding this stock. And, to be honest, I would have no issue, letting the investment run just the way it is. And that is because, as I touched on in my previous video, I came in and I bought this stock with a speculative mindset. I understood that this was my speculative play for 2018. I came in looking, at a minimum 5 years out. So to be completely honest with you guys, I could really care less what happens over the short term, although it's great to see your stock go up 100%. However, the second option, which is actually what I opted to do, was to trim back and just lock in some of those profits. And anytime that you have a stock that's up a nice amount like this, it's always wise to think about taking some profits. You don't want to get greedy and end up giving those returns back to the market. And if this were any other stock in my portfolio, so any of my core positions that were up, this sharply, especially over this short of a time frame, I wouldn't even think twice about, locking in those profits. But because this was my speculative play and I came in with that mindset, I did have to think twice and I was kind of debating what to do, but I did end up selling some shares. I locked in, a few $100 that I made. And one of the best strategies that you can learn to implement is that when you have a stock that's up like this, take some of those profits, right? Sell some of those shares, take that money and reinvest it back into your portfolio, in particular, into areas of your portfolio that aren't doing so well. If you have a stock that's down that you still believe is a good position, a good company to hold for the long run, take those profits that you've earned from company A and reinvest it back in those companies that aren't doing well, right? You're gonna be bringing down the average cost of your shares, like dollar cost averaging. Personally, I have the money sitting in cash at the moment. And over the next little while, I'm gonna monitor the markets. I'm in no rush to invest that money. I'm comfortable holding it in cash. And if I do see an opportunity that comes my way, I think of the consumer staples sector, which in my opinion is offering a ton of value. Some stocks like, the Procters and Gamble's of the world, it might be a great time to add, some of those stocks to your portfolio. So I just wanted to remind you guys that taking profits is a strategy that will do you wonders over the long term. Don't get greedy. Don't leave too much on the table. When you have the opportunity, lock in those gains and deploy that money somewhere else. So guys, thank you for watching the quick video. I'm actually heading out of town tomorrow. I'm heading up to Kelowna for the weekend, so not going to be posting a video on Monday, but I did want to get, something out, so I just thought I'd make this quick video on iQiyi stock. It has been, the talk of the town, the talk of the internet, it seems like over the past few weeks. If you guys are following the stock, if you own iQiyi, let me know in the comments below what you guys think of this recent run up. Personally, man, if I was not already invested in this company, I couldn't justify jumping in at these levels. I don't think that there's really a rush, man. Just be patient, monitor the stock over the next little while. maybe hope for some sort of pullback. That's probably what I would do. And if you guys enjoyed the video, feel free to give it a like. And if you're not already subscribed to my channel, subscribe. I post a video every Monday. And again, I thank you all for watching, and I hope to see you in the next video.